Hey, TMFG community. Carlo Cancino here, Senior Financial Planner with the McClelland Financial Group, and as always with me, John Iaconetti. And we want to thank you for joining us for the next webinar in our series that we do on a monthly basis entitled Planning for Healthcare Costs in Retirement. As financial planners, you know that we work with our clients and in any prospective clients walking through their financial plan. And everything is good as long as, the plan goes according to what we set up. And there could be things that could derail the plan. So, and one of those things in retirement could be changes in your health and requiring care. So that's what we wanted to discuss today. John, why don't you tell all of our listeners and viewers out there a little bit about us first?
Yeah, so just like you mentioned, we are a financial planning office here in the Markham area. So our number one focus is building relationships and really walking our clients through the steps it takes, to have a successful financial plan and to have a successful retirement. To your point, Carlo, we can build a financial plan one day and the next day, everything could be different. Everything could change. So our number one focus is making sure we're staying on top of it. And maybe that ties perfectly into our discussion today, revolving around those healthcare costs and what people can be prepared for or get ready for in regards to retirement. Now, we do want this to be a interactive webinar as well. So if you do have any questions, feel free to use the Q&A function through the webinar as well, or you'll have our contact details at the end of this webinar that you could always reach out to our office if there are any questions that we can elaborate on. But maybe we get started on what we're doing today.
Absolutely. So I had mentioned it earlier, both John and I are certified financial planners. We all are at the McClelland Financial Group. And that means looking at your entire financial plan, from taking you from wealth accumulation into retirement and then to wealth transfer. And again, we create that plan, understanding that you're working, and then you're building an income source, whether it's from pension plans or what you're saving, and then you go into retirement using up those income sources, and then it comes to the point where your wealth transfers to the next generation. Mm-hmm. And all can be great with that original plan unless something derails that plan. And like I mentioned earlier, failing health, anything that changes with respect to your health, any additional costs, that's going to require us to pivot in that plan. But knowing that that could be an option or something that could happen in your lifetime, there are things that you can do to be prepared for it. Mm-hmm. So we have to understand if there are changes to your changes to your health and you require care, what are the things that we have available to us? We know that living in Canada, there is universal health care. So there is a health care plan based, or depending on the coverage depends on, the province that you live in. And you can really lean, and most people really lean on it. Depending on your age, there can be other benefits that you could use offered by the government. But again, knowing that all these things could change, drop of a hat, we need to do the proper planning ahead of time.
Yeah, that's exactly it. And a plan, to your point, could be derailed by these different changes and costs that you may be facing. And on one side, where it's been great, I guess, in terms of the advancement of medical science, where a lot of these healthcare items, can prolong your life and still have you live a very happy life as well. The unfortunate side of it is it comes with a pretty significant cost that people need to be ready to bear. And to your point, there is going to be some support from government benefits. There's going to be some support from other sources. But at least in our experience, it doesn't really do it full justice in order to cover the total amount of the costs. So first of all, the costs that you're going to be facing around overall healthcare probably is going to tend to rise as your age grows. As you start to go from maybe early retirement days at around 65, maybe it might be small things like health and dental and maybe some medications could become pretty significant down into your late 80s, early 90s, where maybe you require much more hands-on care, or maybe even require you to go to a new facility to live in. So these costs are going to change, pretty drastically throughout the course of your retirement. And what we are going to try to focus on today is what are the certain things that you should start thinking about. Some of them I already touched on. So think about medications, vision care, dental care, things along those lines, maybe earlier on in your retirement. But then it could be home modifications later in life to make mobility a better thing for you around your home, or maybe even might be private care in general that you can look at. We always recommend our clients not only assess your current health now, but also think to longevity and the lifestyle maybe that your parents have lived, or maybe your lineage would suggest. When we build our financial plans, we're always planning for living till age 95 and above, which is well above our normal life cycle for Canadians. But we know everyone has their own lineage or health that they have passed down through their family. So always keep an eye on that, monitor that, and see if maybe you should be saving a little bit more heading into retirement just to be ready for these costs.
Yeah, I think that's a great place to start, John. When I think about our client base, it is an aging client base, and we are discussing a lot of those issues now with our clients, and they have enjoyed their retirement. They were in the go-go stages, early 60s, and doing their traveling and having a great time and enjoying their retirement. We now have clients who are entering their late 70s, early 80s, and in some cases late 80s, where they've slowed down and they are having to make a decision. The homes that they've lived in all their lives could be becoming too much for them to handle on their own. So daily living activities, getting up and down stairs, taking care of the garden, landscaping, those sorts of things may become a little bit too difficult. But we have a lot of clients who want to remain in their homes. They don't want the change. They want to remain consistent. They know their home. They love their home. They've lived there for in some cases, many, many decades. Yeah. And so when you think about the change in your health at that age and needing care, there are a couple of options. You either stay in your home if that's what you want to do, but there are costs to have somebody come in to support you, whether that's a few hours a day, to having somebody come in to live, to do those regular daily activities with you. And those will come at a cost. And either you will be prepared for saving now, or you'll have to lean on a lot of those government benefits that we'll touch on a little bit later on in the presentation. So they're staying in your house or looking to live in a long-term care facility or some level of retirement facility. And I'm sure many of you out there have already gone through the motions of seeing how much they could cost, the level of care that you would get, the type of accommodations that you would have, maybe even the food that you would be served while you were living there. And we've seen quite a range of costs from, $3,000 a month to, long-term care facilities, also up to $10,000 a month to a retirement home or a retirement facility where, it's more of a retirement community. I guess depending on the level of support you need, you could start off in some level of retirement community where you are paying upwards of $10,000 a month. But those are the types of things that are challenges or things that need to be thought about, in your potentially early 70s, knowing full well that when you reach your 80s, your house and those costs will be an issue.
Yeah, there's I think a prevailing thought for a lot of retirees when they see that $3,000 to even upwards of $10,000 per month of what retirement care could cost. A lot of people see that and get really discouraged and think that it could not be possibly an option for them. I'd say to that, you'd be surprised, because if you're going to be moving into that type of facility, first of all, it should be the right fit for you. Maybe mobility is no longer serving you well in your home. There's always going to be an expiry date on something like that. And we see it pretty often with a lot of our clients where they hold out in their home until it's almost too late. It becomes too difficult to make the move to a retirement facility where really they should have done it 2 years prior, but they wanted to stay in their home. So I'd openly start thinking about that if you are in that frame of mind. It's a very difficult decision to make, but for some could be very well the correct decision to make. And really where it becomes financially feasible is for a lot of Canadians in particular, you have so much of that equity built up in your home that if you get that money after you have sold your property, utilizing the equity that was built up in your home, getting that money invested, having that growing while utilizing it to make withdrawals to pay the long-term care facility. In most cases, that tends to be the best route, and it simplifies things for the parents and even for the kids. If that money is going to be passed on to the next generation, they don't have to worry about the selling of the home and whatever it might be down the road. But those are some things to consider when it comes to that long-term care and what could be feasible for you. But in regards to the understanding different insurance options when it comes to retirement, Carlo already touched on it. There's going to be a lot of government benefits that are available. So OHIP, MSP, if you are outside the province, maybe in BC, it covers the basics, but it really doesn't cover everything. And in regards to personal health care, things like dental, vision, prescription drugs, maybe even massage therapy or things like that, usually people are covered through their employer throughout their working lives. And then when they get into retirement, that coverage stops. And maybe when you most need that coverage, you are no longer covered. And that becomes a big issue for a lot of people, maybe in those first 10 years of retirement, I'd say, where they should be getting that level of treatment. There are insurance options out there that can mimic what you had through your work plan, or maybe even exceed what you had in your work plan. And there is benefit to those of you that did have work coverage already, because you may be eligible for one of those plans where you don't have to do additional medicals. If you're already coming from a work plan, you can transfer essentially that into a personal plan. It will come with a cost, obviously, and that at that point you need to do a cost analysis where if you're paying $200 or $300 a month for this level of care, are you going to be getting your money's worth in terms of the coverage or in terms of the benefits that you're going to be utilizing? But absolutely, I would suggest, at least for the first 10 years in retirement, to consider it, because that's when you may need that level of coverage more than even when you were working. And to the point as well of long-term care, there is insurance options out there that could help cover some of the costs that you may face, whether it be people coming to the home to help you, or maybe even being able to cover a certain monthly cost for living in a new long-term care facility. This insurance, though, does tend to be a bit more on the pricey side. At the end of the day, insurance is going to be priced based on the likelihood that you're going to claim on that later on in life. And to be quite honest, it's a pretty high likelihood that that would be something that gets claimed on. To what degree? There's probably going to be some degree of claim on it. So that's why it comes with a bit of a higher cost. And for some, it might not be a good fit because you figured, maybe we use what we discussed previously, where you use your home kind of to fund that side of the equation in retirement. But for some, maybe that don't have that luxury of being able to rely on that, long-term care insurance could become a good option for you down the road.
Yeah, no, those are great points to make about the insurance options that could be taken advantage of to help pay for some of the costs that you will be incurring in retirement. Now, again, we just wanted to talk about what, when we are paying our taxes and our income taxes, what is that going to? What can we expect to receive from the federal and provincial government? We talked about it earlier. There's the universal health care varying by province. Again, that's just the basics that John was talking about. On top of that, there is the Ontario Drug Plan for people living in Ontario. Eligible people over the age of 65 are eligible for drug costs. Now, there is an annual deductible. I believe it's approximately $100 annual deductible, and then on top of that, it becomes a copay.
Yep.
So for your drugs that your prescription drugs, there is up to a $6.11 dispensing fee at this point, and then the rest of the drugs obviously will be covered. But that can definitely help with the prescription drugs that you are continuing to take, a little bit more support from financial perspective from the government. Now, depending on there are some groups of Canadians who also will have some additional benefits that you could look into, and we could help you review that. There are, for eligible Indigenous people in Canada, there are benefits that you can also be taking advantage of, as well as veterans of Canada. There is a Veterans Affair health benefit that could be applied for. So there are different groups. So if there are questions about that, we can definitely point you in the right direction and help you do a bit more research on that. But again, what do we suggest? As you get closer to retirement and thinking about healthcare costs, you should be registering for senior benefits as soon as possible. Take advantage of what the government offers. I didn't mention it earlier, but there is the medical expense, federal medical expense non-refundable tax credit. As most of you are aware, any medical costs or eligible medical costs that are over a certain threshold. So either 3% of the lesser of 3% of your net income, or in 2024, it was just over $2,700. Whatever your medical costs are, in excess of that, you get that non-refundable tax credit. So definitely want to take advantage of it. Keep your receipts. Make sure that you are claiming the eligible expenses. I know that a portion of some long-term care facilities, I believe the expenses that are related to actual support and care can be utilized, but we definitely want to keep on top of that. Know what your province is covering. We talked about it before. The coverage based on the province you live in can vary. It's not universal across every province, so you want to make sure that what you are looking to claim is covered. And again, as I mentioned, taking advantage of all tax credits and deductions can help reduce that cost in retirement.
Yeah, those are all very important key points. The other thing that's even relatively new for some Canadians would be even the dental plan. That could become a good option for you beyond the age of 55 and when you're approaching retirement. It is income tested, so that would be something that you need to apply for. I believe it was a net family income of approximately about $90,000, but that could be something that also could help save some dollars when you get into retirement. And we talked about medical expenses for some Canadians as well. If you're maybe a little bit later into your retirement and mobility does become an issue, you may also be eligible for the disability tax credit. That's one that I think a lot of Canadians don't fully take advantage of. Maybe there's a degree of pride, or I guess thought there that I'm maybe not be considered disabled, but through the government's eyes, if you do have issues doing day-to-day activities or mobility does become an issue, speak with your doctor, speak with your physiotherapist, your practitioner, whatever it might be, to see if you may be eligible for that disability tax credit, just to save a couple more bucks on the tax return. But when it comes to actually building a healthcare safety net, what can you start to do now? What can you do in retirement to ensure that you're going to be comfortable in order to pay some of these certain costs? And I'd say start the earlier the better, really. Same way that we start thinking about saving for retirement. The earlier the better, at least you get that money compounding and growing. A good use of this could even be a tax-free savings account for some people. Maybe it's an open account. Maybe it's utilizing some of your retirement funds if you have a pension or whatever it may be. But start setting aside some money, start thinking about it well into the future. And we actually even build this into a lot of our financial plans as well. Just thinking if you're getting into retirement and you want to kind of set aside $1,000 a month, whatever it is in terms of healthcare costs, you can build that in as well, at least to be aware of it. I would say review and update coverages as well on an annual basis is absolutely huge, because oftentimes people have it living in the background of their lives. It's not on the forefront. And maybe when it comes time to claim, you might realize, well, the insurance I've been paying for isn't quite what I need, or it's way more than I need, and I've been paying so much for it over that course of time. So I'd say stay on top of that. Just monitor it on an annual basis, same way that you'd monitor your savings plan or whatever it may be. Keep on top of your insurance as well. And the other big thing to consider is if you do have family that's nearby within Canada, have that discussion with them. If it's not for yourself and what potential care options you may have, it may also be for parents or siblings that it's better to disclose it early, whether if someone's expecting you to step up into that role or you're expecting someone to step up into that role, have that open discussion. At least that way there's no surprises if and when the time comes where care does need to be there.
We've gone through a lot today. And if you haven't been taking notes, or you could actually go back and play back the actual webinar. But for those that wanted to do additional research on their own, there are resources and tools available to you, and you want to take advantage of that. And where would be the first place to start? I mean, if you're thinking about the government benefits and what you would be eligible for, what it would cover, start with the Government of Canada website, canada.ca, or the specific provincial websites that you currently reside. That is a great starting point, just to get the basics and coverage amounts, eligibility, get that information. From there, you could engage with a professional, whether it's your financial planner. We put it out to all of our clients and prospective clients. We are certified financial planners. All of this is part and parcel of a holistic financial plan. So any questions about the information that you have gathered on your own on those websites, we've been through it.
Yeah.
We've seen it all with our clients. Come to see us. There are also elder care consultants that you can deal with, private companies that, specialize in the in retirees in the later stages who could definitely help walk you through or answer any questions that you have. Any other specific questions, or if you're a do-it-yourself or online, there are a myriad of tools that you could walk through. Retirement income calculators could be if you weren't sure about the drug benefits that. Again, going back to the provincial website, just to understand what that looks like. Don't know if the existing insurance that you have is enough. There are many, many different insurance comparison tools that you could be using to ensure that there's no deficit, or you could be in a surplus position from insurance.
Yeah. There's, to your point, there's a ton of resources that are out there. I mean, being able to utilize them all. You made a very good point. It's relying on the professionals in your lives, whether your financial planner, maybe your accountant might know regarding some of the medical deductions, let's say, or maybe it's your doctor, physician that might know of other different things that you can utilize. So a lot of resources out there. The next step is figuring out how to best utilize them all. But just to kind of put a bow on our discussion today, or kind of some key takeaways and some key summaries. First of all, unexpected healthcare costs can absolutely significantly impact your retirement. We've seen it firsthand with a lot of our clients that needing to be prepared or proactive to be able to cover them will put you well ahead of the average Canadian leading into retirement. So absolutely start thinking about it. Create that peace of mind for yourself. It's always the fear of the unknown, and it's always what you least expect will come up as that cost. So as long as you're prepared for the unknown and for that potential cost that could be, maybe it'll make making that decision of retirement a lot easier for you. And really just get a good grasp on your options, what's out there, whether it be government plans, whether it be insurance, whether it be self-funding. What can you do in order to cover it? But those, I'd say, are the main points to hit on today.
I keep talking about it. John and I and Mike and all the other advisors in the office are certified financial planners. We're looking at your entire financial situation, taking into consideration income, expenses, insurance coverage, tax. For those clients out there who haven't updated their plan in a while, come in.
Yeah.
Let's review. Changes could have happened since our last update. It's really important for us to keep on top of what that plan looks like and make sure it's accurate to what your actual reality is. For prospective clients, anybody out there that's viewing that just doesn't know, haven't organized their financial situation, come see us. We're in Markham. We're in a brand new facility at 675 Cochrane Drive in Markham at the corner of 404 and Highway 7. We're in this new facility, and it's beautiful. We're very proud of it. So any prospective clients want to come in, come see us, ask those questions. Happy to help. And for our existing clients who we've been seeing on Zoom and seeing virtually, again, we'd love to have you in the office. I think John and I can agree that the meetings that we have in person are far more engaging. We get a little bit more out of it, and I think our clients do as well. So definitely, if anything here has piqued your interest, or you have questions, or you want to update your plan, have a meeting, definitely reach out to us. We'd love to see you in person in the office. So from there, what do we do at the McClelland Financial Group to help engage with our clients, provide education? For those of you out there that are watching the webinar, maybe you're aware of our YouTube channel. John and I do a video called Ask Team FG, where weekly we put out educational content that hopefully is relevant to some people. And, we're starting to get a little bit of a following, getting some feedback on the channel. So it's great. Obviously, we appreciate that. We always want to make our videos better. We want to be doing topics that are of relevance to you. So please keep engaging with us. Really would appreciate that. From an audio perspective and actually a video, Mike and Rob do the Think Smart podcast, which is now on the YouTube channel as well, providing, again, educational content, interesting concepts to think about. And, it's just a way for us to keep in contact with you. Again, feedback is great. Any questions or interesting topics that you'd like to hear, please forward that along to us.
Yeah, education is always going to be a huge part of the retirement planning process. We're not just going to advise just to advise. We want you to understand the process that goes along with it. So that's going to be absolutely huge. And to that point, what comes with education is questions you may have or getting answers to some of the questions you may have. So feel free to contact us. Information is up there on the screen. teamfg@assante.com is the best place to reach us via email, or you can even reach us at 905-771-5200. But otherwise, that's another webinar in our installment here. Stay tuned. We love doing these webinars for you guys, and I think we're getting a lot of traction in terms of educating as many Canadians as we can. So let us know as well in the Q&A section or anywhere via email or whatever it may be, other topics that may be of interest to you, just so we can focus on that going forward. But otherwise, we do appreciate your time today. All the best and take care.